So with a market pullback like today, the question I always get is, when should I hedge my account? How do I do it? What do I look for? What are good targets? And in this video, I'm going to tell you everything that I like to look for from a technical point of view on how to short the market, when to, what targets I aim for, and then also when we might be expecting a bigger, longer term pullback in the market itself. So we've had quite a bit of selling today. You can see that here on SPX. We've gone right down into the 30-period simple and ATR trailing stop. And the ATR trailing stop is personally my go-to that I like to watch on whether or not I am going to start looking for hedges for my account and getting a little bit more aggressive on the put side outside of maybe some intraday trades. Normally, any sort of pullback for me into the 10 or 30 is more of a buy opportunity to jump back into the long side. But the key I've found over the years is the ATR trailing stop, which is this dotted blue line on my charts. And the reason why I watch that level in particular is because I have found a lot of times, unless it's a fake out move, which I will go over what that is here in a second, as long as it's on a fake out move, it usually indicates for a continued sell, typically down into the 100-period simple. Now, let's answer that question of what a fake out move is. A fake out move for me is when it barely breaks the ATR, but it either holds a support level or it basically closes right by that level still on the bar. The Bollinger Bands don't typically budge. And so that's usually your clue for a potential fake out where the bears end up getting trapped and the bulls re-engage to the long side. And you can see the last time the ATR trailing stop broke, it was a fake out move. That was the low of the move, and it was actually a good place to buy. But a lot of times that won't always be the case. So let's just go back to 5 years on the daily chart, and you can see how many times we've broken the ATR trailing stop and that kind of reversal down into the 100-period simple, if not for a stronger continuation lower. So we talked about this one being a fake out move. Back here, the last time we broke the ATR trailing stop was right here. Now it immediately went to the 100, right? Because the 100-period simple was very close to where the ATR trailing stop was printing. So when that happens, you look for that possibility of a break of the 100, or in general, if you get the pullback into the 100-period simple moving average on the daily and it starts to fail, that's the time that I personally will look to get a little bit more even on those bearish trade ideas, maybe get a little bit more aggressive with my puts, and play for that sell-off until proven otherwise. So you can see here, we've started to fail the 100. We made some nice bearish divergent bars. Those are usually short-term bearish signals. And you can see that's when the selling really started to happen in April, and we went down into longer-term support levels on the weekly and monthly timeframes. So that when it breaks the ATR and it fails to get back above the 100, that's your time to really go a bit more short in your account. And we'll see that back in 2022 and other places. Here, we had a break of the ATR. Now, unlike that first one that I showed y'all, this one we made a bearish divergent bar with. Bollinger Bands started to open lower, and it was the close of the bar was nowhere near where that ATR trailing stop was printing that dotted blue line. So that told me to play down towards the 100. You can see we had a little bit of a bounce, pull back again close to the 100, bounce, resistance failed to get above it, right? Price did. And then we play into the 100-period simple. So that was a good place to start shorting and hedging your account a little bit more. And if the 100 holds, that's your discount buy opportunity. You can see that also was timed with the true low on the daily chart. That's one of my indicators to show a really nice discount buy in the market. And you can see it had a nice bounce back up. Here as well, the ATR trailing stop broke. Now, this was a fake out move. Why? Because the price barely broke that level, continued to maintain that range, right? That price support. Bollinger Bands didn't budge. And so that told me to, at the very least, wait before putting on a hedge, if not maybe treated a bit more like a discount buy, right? Because we weren't really falling apart at that range. And it was a good buy if you played it for the bounce up. Here as well, we broke the 100-period simple. We broke the ATR trailing stop, but we were right at the 100-period simple. So no need to keep going any further off that time. If it can't break the 100 at that point, you stay the course and look at it as a buy opportunity. Here, we broke the ATR trailing stop. Now, I would have been a little hesitant at the 30-period simple, right? Because it was trying to maintain support. But once this started to fail at the 10, especially with a bearish divergent bar, good place to short. Even if you waited for the next day, you can see the Bollinger Band started to open lower. We broke the 30. All of that was a clue to play down towards the 100-period simple. And in this case, we broke the 100 a little bit. But once it managed to start to get back above it, right, you cut your puts. You don't want to stay in puts too long, and then you go to buy the market. The reason why you don't want to stay in puts too long, especially if the price is able to get back above the 100, is because the market is naturally a bullish beast, right? When we go and look at a monthly time frame or a quarterly time frame, the market naturally moves higher. The place where bears get caught up the most on losing their money is not getting out soon enough, thinking everything's going to continue lower. And it's oftentimes on that reversal where any profits they made to the downside, they end up losing. So you want to be mindful of that, guys, as we potentially look to short the market. Here as well, right? We broke the ATR trailing stop. Now, you might have been hesitant that first day, but certainly the second day, whenever the Bollinger Band started to move lower, we failed to break above the moving averages. They maintained themselves as resistance. That was your place to short into the 100. The 100-period simple holds support. Right? You had a few times of testing it. Those were your buy opportunities to jump back into the long side. Here as well, right? We broke the ATR trailing stop. The Bollinger Bands were already starting to open lower here. That was your place to sell it into the short side and into the 100-period simple. That held. You play for the bounce. When resistance holds, you could look to short again. You might have waited until the actual break, right? But that was a clean break of the 100-period simple, while the ATR trailing stop remained in that red dotted line. That's resistance. So that was a place to start to look to get a little bit more heavier on the bearish side of your account. We tried to break above the 100, failed. That's what I like to call an Admiral Akbar for my Star Wars fans out there. It's a place where the bulls get trapped and the bears re-engage. So you can see we had a rollover move there, went back up, tested the 100, and then that time we managed to break. So if you still had some shorts on at that point and it started to break higher, you cut them and you look to play that back long, right? And that had a nice move higher after that. Here as well, broke the ATR. Now that was right at the 100. We did have a little bit of a dip below it. This one would have been a bit trickier of a hedge to put on. Was a bit short-lived though, maintained holding the 100-period simple here. So that was your buy opportunity and a place to cut your shorts. Here we broke the ATR. That was already below the 100, so we moved a bit lower. And then once again, once you get back above the 100 and it holds, you switch back to the long side. And then, of course, this was our bigger move that we had back in 2022, right? Or one of the bigger moves. So ATR trailing stop went back into resistance, broke the 100, that failed short. You tried to break here on this bar here when it failed. I remember we got short over in the small lots room over at Simpler Trading. That was a good place to short from. And then once again, that failure, you short into support, and then it tried to break back to the upside. Let's keep going. So here as well, ATR trailing stop broke. You were already below the 100 at that point. So that's more your place to just re-engage on the short side because it, once again, was an Admiral Akbar. The price tried to get above the 100-period simple, couldn't do it, ultimately failed. So the bears trapped the bulls and re-engaged them short. This was the initial break of the ATR for the start of the 2022 move. As you can see, you could have played into the 100. Once that broke, you short, place to re-engage, and then, like I say, place to re-engage to the short side. Here we broke the ATR, you play into the 100. Here you broke the ATR, you play into the 100, and so on and so forth, guys. So you have a few years of data to show you how that ATR trailing stop can really help you signal a possible reversal entries, as well as what to be mindful for about a potential fake out move. And if we do break the ATR trailing stop and we go down, and it breaks in a significant way, it's not going to be a fake out move. If it, with where it's at right now, if it barely closes like this, then it might be a fake out move, right? Especially if Monday the Bollinger Bands remain flat, we start to bounce. That might just be a buy opportunity. But if we break this a little bit more meaningfully, I will be looking for a move down to the 100-period simple. And if that starts to break, then we might be inclined to play for a lower target into either the ATR trailing stop on the weekly time frame or the 30-period simple on the weekly time frame. But I'm not even aiming for those yet, because the first thing we need to do is break this support. And it's starting to, right? But I don't think we'll get enough of a move into the close today for that to happen. So what I will be watching on Monday is, one, how does Monday trade, right? Does it hold this price level and we immediately start to bounce? If so, I'll probably start buying before market close. Do we still hold this range at market close, maybe dip a little bit below it, but maintain? If so, that would still look like a buy opportunity to me. Or does Monday start to stair step down? And if Monday starts to stair step down, that's when I know to hedge my account, aim for a bearish trade like a broken wing butterfly or a vertical spread or just straight puts, depending on how you like to trade, and aim for your target to be the 100-period simple. And if it gets any sort of bounce, watch how the moving averages act. If they maintain resistance, re-engage to the short side until this target is hit. If we start to break above it, then you might be a little bit more cautious, maybe, clean up some of your puts and start to buy longer term bullish trade ideas, making sure you give it that time in case you have to ebb and flow. And if the price breaks the 100-period simple, then I start to look to be a little bit more bearish in my account and look for those weekly support levels as targets and places for the price to potentially hold. I hope this, guys, helps you out on the things that I like to look for. Don't forget to like and subscribe. And I